All right. Welcome. This is Tim Judge, founder of Home Search TV, HSTV Live, now broadcasting on Roku and all of your other major streaming services like Amazon Fire TV. We're on YouTube Live, Periscope Live, which streams into Twitter, and we are on, of course, HSTV Live, which is its own website where you can search for listings. I wanted to talk about the state of the states. So this is my launch broadcast of the state of the states, and I'm showing you a partnership with Housing Alerts, which will give us the state of the states, and we're going to look at the marketing reports and the level of what the markets are doing state by state. If we take a look at what's going on here, I am going to increase the screen. And if you do have any questions or comments, you can comment along on any one of the channels on Facebook Live, on YouTube. We're streaming live, and I will see your comments, and then we will incorporate that into the show. So if you have any questions, we'll take a look. But this is the marketing report from Housing Alerts, and we've partnered up with them. We're going to have this widget right on the HSTV Live site. So let's take a quick look at that. We're looking alphabetically. We'll start off with Alabama. And if you look at this star momentum, it's a very quick graph. It gives you a pretty obvious picture of what the market's doing. And you're going to see a lot of this right here, that the current quarter is, in jeopardy. Now, we just changed quarters, so this is probably the past quarter that just passed us, where there's a lot of trepidation about the market. But in Alabama, it's been a solid market for quite some time now, and we can get more in detailed reports. This is just an overview of the state of the states, and you'll see some differences going on, but we're going to go alphabetically today, and we'll do different shows where we dive deep with different realtors in the markets. So Alabama, the star momentum indicator, now that's just what's going on, the energy in the market, what's going on in Alabama for the last few quarters. So that just gives you a good picture of what's happening there. There also the technical analysis, it's sitting right at neutral, which means that the market's neither strong nor weak, and it's right there, right in the center. It's been sitting there for a little bit. And further down, the long-term cycle, it's you can see the real inflation adjusted annual price appreciation is still positive. It's even well over the moving averages. We have a 10-quarter moving average and a 20-quarter moving average, and this is up around 4%. And of course, the percentile marketing ranking gauges, the master gauge, it's better than 84% of the markets. The star is better than 92% of the markets. TAPS is the local market, meaning just what's going on inside there, and that is also very strong. The 1-year total home appreciation rate is steady, still 69, better than 69% of markets, so that is pretty strong. That's looking good right now for Alabama. We're going to switch right down to Alaska, and we'll see what's going on up there. Now you see that this shows that there's been some trouble creeping into the market, a little bit of caution from a year ago to now, still caution, but it looked like it's bouncing back a little bit. So this is setting off the technical analysis at a weak market, right? Because there's so much going on here, red, yellow, green. So it's not too bad. And of course, given the springtime that we had here, it's absolutely crazy what's been going on. So you'll take a look at that and see that in a lot of markets. But this is up in Alaska. We have it's got a semi-weak market. Now we're going to be bouncing back, so hopefully that will bounce back stronger. But as you can see from this long-term cycle here, you can see it's a little bit closer to the line. Not much appreciation going on there, and this is back way back to 1985, and you saw what was going on there. This is 05 to 09, where it shows where it dipped, and then Alaska's been, riding the line there for a while. Now this is at the bottom, the master market gauge here. shows that it's 7%. It's pretty low. That most of the markets are above what we have going here. The Star is at 50%, and TAPS local is at 28. It's all showing fairly weak, and that's why this analysis right here, the slider bar, shows weak for Alaska. But we can dive into the local markets up there in another show. Let's take a look at Arizona. So Arizona, we have, again, a very mixed market right here. Very cautious. We've had some red in the past, and right now it's looking very positive. They're bouncing back pretty quickly, which is good. But these are really the indicators right over here, long term, where you want to be cautious, because there's a lot of red right here, and then of course the cautious yellow. But this is moving off the week from the technical analysis, the TAP score. It's moving off week into a neutral market, which is good. The long-term real estate cycle, you can see here, of course, from 1985, it took the big dip in 567, and then leveled off, and we're right about 5%. It's hovering right around those moving averages too, so we'll keep a track of what's going on there. The master score is still pretty high, which is good. It's higher than 75% of the markets. The Star is in trouble there, and the Star is it's useful between markets internally, so you can see that there's internal volatility there. Then you have the TAPS local market, which doesn't take into account other surrounding areas, and the total home appreciation is 96. So that's a very strong number right there. And that's Arizona. Moving right along. Arkansas. So here we go with Arkansas, looking very strong in the past. Of course, this week stuff going on here in the short term is looking like there's some trouble, but who hasn't had trouble right now? But it's off a weak market and just below the neutral market right there in the technical analysis, the TAP score. Long term, it's still pretty strong, around 3%, just under 3% total price, home price appreciation, and then still above the 20-quarter moving average and the 10-quarter moving average. The master score will tell you that it's still pretty good at 65%. The Star report is at 88%. Green is good, yellow is cautious, and red is bad. So this home appreciation is pretty low. So that's something to look out for. That's Arkansas. California. We're going to breeze right through these. Keep right on going. If anybody has any questions or wants me to go back, I'm happy to, and we'll just go from there. But let's keep on going. California, all red. Not surprising what's going on in California. It's kind of what is that, the second most worst hit one with the COVID shutdown and everything like that. So you want to be very cautious buying in California right now. Long term, seeing a lot of red in this market, and it's also showing up on the TAP score very weak. And we take it the home appreciation is dipped under the 10 and 20 quarter moving averages. This was back in the 90s. It took a big hit, and then from 5, 6, 7 took a big hit and took a while to recover there. So California is in a tough spot right now, and you can see the master scores and the Star rating. Everything is moving the needle to the right. So California is a tough market to get into right now, so you want to be very cautious. Colorado also having a tough time. A year ago it was cautious, but we've moved into the red for them. They're showing a very weak market on the TAP score, but the home appreciation still at 3%, but it's well below the 10 and 20 market moving averages. So they're in a tough time in Colorado. The master score is 26%, and that is, if you were looking at the one overall market indicator, the master score is pretty solid. The Star is for when you're comparing against nationwide. So this is also a tough one. They're in the red, and then the home appreciation is also pretty low in Colorado at this point. Connecticut, my home state. So we're looking okay. Again, mixed here. So long term, these quarters, we're seeing some red, and then we're bouncing back nicely. We're right next to New York, which is having a real tough time. We'll get into that, but Connecticut right here, showing a strong bounce back, but still a cautious indicators right here. We are showing a weak market, but it is bouncing back. So you're going to see a lot of weak markets and a lot of trouble with the TAP score. But as far as Connecticut goes, we're barely over the line here with the 10 quarter and 20 quarter moving averages, and we're just about 2% total adjusted annual home price appreciation. So when we look at that, we have a strong star indicator, which is good, but the master score is low, and the TAP score, the local score, and the home appreciation is pretty low in comparative markets. So we've got some bouncing back to do, like everybody else, and so we have a mixed score, but we'll keep on trying. Connecticut. We'll move on to Delaware. We're just going to breeze through these states, and you can get these. We're going to have the widget straight on the Home Search TV site, HSTV Live, not hstv.com, hstv.live, to take a look at this. Then you have Delaware, a lot of green. We were working 2 3/4 ago, a year ago, worried about this, but this is bouncing back nicely. You can see from the current quarter, we're moving off the weak and into the neutral area, which is good for Delaware. And you can see that they were up close to 4% total home appreciation, above the 10 quarter moving average and the 20 quarter moving average. They're above those, which is strong. And of course, this weak market that we're in right now, everybody has to bounce back. But because of what's going on, we weren't really in a housing crisis. The pandemic was a different story. So this is going to throw a very interesting loop into all these numbers and this study. So the master score is in the yellow zone, which is all right. The star is very strong at 76. The TAP's local, very strong at 78. The home appreciation is right there, just about smack in the middle at 53. So Delaware is looking pretty good. DC, I'm going to skip that because we're just going 50 states. Florida, looking pretty tough right now. Florida's gotten the bounce back from the pandemic. It's been showing a weak market. The long term's been having some troubles. It's a tough time for Florida right now. They are at about 5% home appreciation, but they're dipped below their 20 and 10 quarter moving averages. So Florida is in a tough spot as far as the market goes. It's showing it's very weak, and the master score and the star score are in the red. The local scores are in the red. The home appreciation is pretty strong. That's good for Florida, but they've got a ways to go in the Florida market. Georgia, right above Florida there. Now they've got a pretty mixed market going on. The long-term market is, a lot of red and yellow. We showing some promise in the mid there. Cautious moving forward in the short term. They are just below neutral, but above a weak market. They've been showing here in the long-term real estate cycles, you can see that they're just above 4%, but they have broken underneath the 10 quarter and 20 quarter moving average. So that's what would show it for a weak market. So you got to be careful when you're investing in Georgia. And you can see the master score is okay at 61%. The star is low at the down in the red at 25. The TAP's local, so the local market's not taking outside factors. It's still 57, but the home appreciation is still pretty strong at 82%. So Georgia's pretty interesting. Could bounce back nicely. Hawaii, I got some friends in Hawaii, but their market is looking pretty tough. It's these star momentum indicators are all in the red. Very cautious over the last quarter, so the short term should be bouncing back. hopefully, but the TAP score is very weak. So Hawaii is having a bit of a tough time. The long-term cycle, you can see here, they've broken underneath the 10 and 20 quarter moving average. So that puts them in a tough spot for real estate appreciation. And you can see their master score, the star score, the local, and that is all pretty low, which makes for a tough market to invest in right now in Hawaii. Idaho. Actually saw an Idaho plate just the other day driving through Connecticut. Pretty funny. They've had a pretty strong market, but over the midterm and short term, they've seen some trouble. But as you can see from the TAP store here, it's a pretty strong market, which is good, but recently showing a little bit of trouble. But that could be COVID. We could bounce back from that. Idaho is still a pretty strong market. As you can see, they have very good price appreciation there, even though they're riding a line on their 10 and 20 quarter moving averages. But as you can see from the percentile grades, that the master scores, they're better than 98% of the markets. The stars better than 86. Local markets 98, not affected by other things around them, and the total home appreciation rate is very strong at 98%. So they're looking like a pretty good place to be in Idaho. Illinois, a bit of a mixed bag, a little bit of red here. So this is you want to be cautious about what's going on, but they do have some green, so it's a bit of a mixed market. The TAP score is showing it's weak because the home appreciation is pretty low. Unlike the last one we looked up that was closer to 10%, this one is showing a moving average just under 2%, and then it didn't break through. It break through just in the past, but it did hovering right around the 20 quarter and 10 quarter moving averages. So that makes for a weak market, and you can see from the master scale here, they're in the red at 15%. The star is in the red. So this is a tough market and a tough time right now. Hopefully they bounce back in Illinois. We'll switch it up here to Indiana. Indiana has a strong base, which is pretty good. Of course, the short-term quarters seeing some red and yellow, which is understandable after the shutdown. We have a TAP scores solid neutral. They have strong appreciation here, but it's riding the line of the 20 and 10 quarter moving averages. Their gauges are strong. The master score is pretty strong. The star score is strong, 78. The local score is 73, and the home appreciation rate still solid 65, but in that yellow zone. So you want to be cautious in Indiana. Moving right along to Iowa. Iowa's got a bit of a mixed bag. It was solid for some time, but the more red you see, the more cautious you're going to have to be. So this is showing up to be a very weak market over recent quarters. Looking at these indicators, long term, you see that the home appreciation was just under 2%, and it's dipped below the 10 and 20 quarter moving averages. And these percentile gauges, 5%. So most of these markets around them are better than them. They're at 21% for the star. The local is 1%, and the total home appreciation rate is 9% for their percentile. So they could be doing much better in Iowa. Kansas. Let's take a look at Kansas. And again, a little bit mixed, but a lot of yellow here. They're losing out on their green, so they're showing a TAP score of a weak market. And that's because they're moving below their 10 and 20 quarter moving average, but they're up at 3%. That's why they're in the yellow and not in the red. But their gauges are still in the cautious area. Their star has slipped under 50% to 40%. TAP's locals 50, and total home appreciation rate 59%. So they've got good appreciation, but it's showing a mixed bag for Kansas. We'll move on to Kentucky. In Kentucky, you can see that they're losing their green too, showing a little bit of promise in here, but showing a weak market in the current quarters and current time. A year ago, they were stronger. Looking, the long-term outlook was good, but it's showing a weak market right now. Then you have their about to cross underneath their moving averages for the 10 and 20 quarter moving averages, which shows a breakout. And then your percentile gains, they're below 48% for the master score. Their star score is 51. TAPS local markets are 44%, and the home appreciation 36. And that's Kentucky. Now we move on to Louisiana. Louisiana, a bit mixed again. Currently, long-term outlook is looking pretty weak. So it's down here at the weak level for the TAP score. It was showing some promise. So we got a mixed bag again. So let's take a look at the long-term cycle for real estate. It was it hasn't crossed through. It had recently crossed through in the last few quarters. This is what's showing it as a weak market. But the 20 and the 10 quarter moving average is just below where it is for the total home appreciation price, which is about 2%. But that's showing these percentile gains. The master score is 13, star is 48, TAPS local market is 34, and the home appreciation 13% in the 13 percentile. So that makes for a tough market for Louisiana. Maine is where I want to retire. Oh, looking good. Maine is pretty strong over the long term, looking good. Of course, this current quarter and everything that's been going on is tripping cautious, but it's up here in the strong zone. So Maine is looking pretty strong. The TAP score, their moving average is still above 4%, and their 10 and 20 quarter averages just below that. So they're still holding steady there. So the outlook for Maine is looking pretty good, and you can see that their percentile gains are up in the high range, 94 for the master score. The star is at 90. Locally, there aren't too many outside factors affecting Maine, so that's strong, and the house appreciation is strong at 80%. So Maine's looking pretty good. Maryland. Here we go. Maryland's looking a little mixed. Long term looking pretty weak. That's why the TAP score has it as a weak market. So when this is mixed like this and this starts creeping in to a year ago was showing signs of trouble, that's why it's an indicator that it's going to hit some weak market times. This percentile rate, you see they took a big hit during 07, big change in the market there. And then you have their real estate cycle, their home appreciation is looking like it's about 2.5%, and they're just about to cross their 10 and 20 moving averages. And then you can see their percentile rankings are all in the red. 36 for the master score. The star is 42. The TAPS local 36. And their home appreciation is 19th percentile. So they're not getting much appreciation in Maryland right now. Massachusetts, moving back up to the Northeast, New England. Massachusetts is having a tough time right now, looking like a weak market. All their quarters and everything else showing in the red. So it's going to have a tough time. Let's look at their home price appreciation. Adjusted, they have dipped below their 10 and 20 quarter moving averages. So that's going to show, that's why that's showing for such a weak market right now in Massachusetts. Percentiles, 17th percentile for the master score. The stars at 15. The local, even on the inside, is low. the home appreciation's in 28th percentile. They're having a tough time in Massachusetts. We'll move over to Michigan. Michigan's having a tough time. A lot of red quarter by quarter for here in Michigan, showing some promise, but this is basically a weak market. They have dipped below in the long-term cycle. Home appreciation still showing 2%, which isn't bad. Of course, you know, I'm showing it a weak market, but you still your home is still appreciating well, and you can see that this was not, again, we look at this where the banking failure came in and overspending and overbuying by the markets. So that's why we had this correction. But even the long-term rates, they're showing that this was dipping below the 10 and 20 quarter moving average. So that makes it a weak market. And then we'll look at the percentiles. It's 19 percentile for the master score. The star score is 11. TAPS local is 17, and the home price total home appreciation rate 34 percentile. And that's for Michigan. Moving up to Minnesota. Minnesota's a bit of mixed. We have a little bit of strong indicators here, but definitely mixed and cautious right now. It makes it a weak market because they also, long-term appreciation has dipped below their 10 and 20 quarter moving averages, which is showing, that's why they're showing signs of tough market when it breaks through those. So right now, just over 2% home appreciation, and their percentile rankings, 30% on the master score, 23 in the star. TAPS local is 23, and their home appreciation 32 percentile for them in Minnesota. Run down into Mississippi. We'll take a look at what we got going there. Mississippi's had some mixed. Long-term is definitely mixed here. They're moving off of a weak market. Their TAPS score is moving off the weak market, coming back, so that's good. So you have a long-term indicators, mid-term indicators, and short-term indicators. So they're starting to show more green than what they had in the past, which is good. And as you can see here, they had dipped below their moving averages, the 10 and 20 quarter moving average. They're up at 3%, where their 10 and 20 quarter moving average was below 2%. So this is why they're moving off the weak market and into a stronger market. So very good for them. Their percentile gauges, while cautious here in the yellow, we could see that they're moving to the positive. So 57% master score, 67 for the star, 55 for the TAPS local, and total home appreciation rate at 51%. Coming back, Mississippi. Now we're looking at Missouri. Missouri had some positive long-term stuff, but we're looking here at short-term is very cautious, but we're moving off the weak market from the TAPS score, you can see, and the arrows will show you that this is moving off the weak market. So they're at about 3% long-term, and their 10 and 20 quarter moving average is about the same, so they must be moving into the positive area there, showing signs of moving off a weak market into a stronger market. Their percentile ranking gauges, 9%, they're kind of stuck in the middle, but they're showing positive scores, so these should change to the positive. Total home appreciation, 57%. That's a good sign. Montana a bit mixed, showing some red, but we're moving off the weak and into the neutral, and that's good. So in the past, a year ago, they're showing some mixed market here, red and green, but it's moving off of that. As you can see, the short term is looking a little more positive. So that's why the TAPS score has moved up from mid to neutral. They must have moved above their 10 and 20 quarter moving average. Total home price appreciation at about almost 5%, which is good, which is why things are moving up for them. Their master score is at 90%, which is strong green. Their star score is 63 percentile. TAPS is very good for their total appreciation locally, and their total home appreciation rate 94th percentile. So they're looking pretty strong, and that's why that's moving off a weak market and into a stronger market. And that's Montana. That's Montana. Let's hit Nebraska. Nebraska is moving from a strong market to a weaker market, and of course the short-term stuff is showing signs of trouble. So you have a weak market on the TAP score, and as you can see from their long-term here, their average has moved below the 10-quarter and 20-quarter moving average, so that's why they're going to be showing in a weak market. Total home appreciation still at about 3%, but you know, they're breaking through that line of the moving averages, so it's looking tough. Their 05, they obviously had a nice bounce in the mid-90s, but then we're coming down, and on 05 they bottomed out here, but they crossed through there, so that's what's giving them some red signals. The master score, they're in the 44th percentile. The star is in 38. The TAPS local is 30, and their total home appreciation is at 46. Nevada, what happens in Vegas stays in Vegas. So you have weak market. We're showing very strong indicators that this is a tough market right now for Nevada. As you can see, their TAP score is very weak, and their long-term cycles, they're about to touch the 0% appreciation. Their inflation-adjusted annual home appreciation rate is probably about 1%. Their 10 and 20 quarter moving averages, they're well below that now. They're probably at 6%. So they're having a tough time with their being underneath their moving averages. So their scores are taking a beating. 46% on the master score. The star score is 17%. TAPS local at 38, and the total home appreciation rate 40 percentile. That's for Nevada. New Hampshire. Back up into the New England area. That was showing New Hampshire showing pretty strong long-term, and then a weak short-term, but they're moving from the neutral to the strong area. So the long-term outlook is looking good, but they're bouncing back nicely in the current quarter. They're showing that if we move down to the inflation-adjusted annual home price appreciation, they are moved back above their 10 and 20 moving quarters. So that's good. That's strong. That's why they're moving into the strong area. Their percentile ranks, they're better than 92%. The master score, their star score is 75. The local markets are doing well against each other at 96. And then their total home appreciation rate, 88. They're better than 88% of the markets. Nice going in New Hampshire. The Jersey state, where the wife is from, showing a weak market. Sorry about that. Mixed bag here, but long term we've got some strong indicators, but also some weak indicators going on in the New Jersey market. That's why we're looking at a TAP score, which is weak. And then the long-term real estate cycle for investing there shows probably about almost a 3% inflation-adjusted annual home price appreciation, just a little bit above their moving averages, but it had been flirting, breaking that line, which has put it in the danger zone. Percentage is right mid-grade, 50% on the master score, 65 on the star report. The local internal markets are having trouble, the 48th percentile, and the total home appreciation right now is 25%. Out to New Mexico, where the in-laws are. Their strong market, looking pretty good. Long indicators, of course, tough for the last quarter. Strong on the star technical, the TAP score, and you can see they're well above their real estate cycle, their inflation adjusted home appreciation. 10 and 20 are out of a 2%, and they're well over 4% on their price appreciation. So their gauges are going to be pretty high. 96 percentile on the master score. The star score is 98. TAP's local score is 92, and their total home appreciation rate 92%. They're in the 92 percentile of the market, so New Mexico's holding strong. Back here, my home state of New York, where I was born and raised. Strong long-term indicators, but the short-term indicators are showing tough market. We also got hit very hard with the COVID, so there's going to be a lot of people looking for more space. There'll be some people moving around. It's indicating neutral right now. You can see because it's flirting with the 10 and 20 quarter moving average on the price appreciation, just below the 4% mark. Master score is 80%. Star report is 80%, 82 on the TAP's local score, and the total home appreciation is in the yellow at 67%, and that's for New York. I think the state hit worst with the COVID pandemic. North Carolina, moving right along. Strong long-term indicators, having trouble recently because you could see by they're in the middle of the weak and neutral market. You can see from the long-term rates, they're hovering, they just dipped below. That's why they're having trouble. Right now, they're dipping below their 10 and 20 quarter moving averages. So it makes it tough for North Carolina. Their master is at 67. Star percentile is at 61. 63 for the TAP's local, and their total home appreciation rate is at 71. So that's giving them a good rate there for North Carolina. Move up to North Dakota. North Dakota long-term is not looking very good. Short-term was looking pretty good. They're showing a weak market on the TAP score. You can see that they are breaking through their 10 and 20 quarter moving averages. They're still at about 1.5, almost 2% price appreciation, but their moving averages are strong. You can see that they're coming back up a little bit from this swing, so they should be they should show some more price appreciation once we start bouncing back from this COVID pandemic. But they're right now, their master score is 1%. Their star report is at 30 percentile. They're in the 19th percentile for the TAP's local market, and their total home appreciation rate is at 5%. That's the 5% percentile. And that's North Dakota. Ohio. Ohio had some strong indicators long term. They're smack dab in the neutral market on the TAP score. We look at their pricing indicators. They took a big hit, really waffling down here for the 06-07, but then came bouncing back nicely. They are above their 10 and 20 quarter moving averages, which is strong. But of course, they're flirting right around those levels, so that's why they show up in a neutral market. But their percentiles are strong. They're in the 88th percentile of the master score. The star score is at 82. TAP's local market is 84, and the total home appreciation rate is at 75. They're in the 75th percentile. So Ohio's looking pretty strong. Oklahoma. Long-term, Oklahoma's must have crossed that line for the analysis, the TAP score is moving to the weak section. They were strong, but this is tipping back, so we have two reds and starting to tip back. And right now you can see that they took a big hit in 85, and in 07 to 10 they were really hurting there, and now they've been flirting recently with 0% total price home appreciation. They're right now just over 3%, but their moving averages are at 2%. So a bit of a mixed bag, but moving towards the weak side. Here's their percentage rating: 32 percentile for the master. The star report is 53 percentile, 51 for the TAPS local, and total home appreciation rate at 48. Now in Oregon's having a tough time. They have broke below their moving averages. They're showing a really weak market. Weak for Oregon, and you can see their long-term real estate cycle, their 10 and 20 quarter moving averages well below what they've been used to. So they're above, they're in the positive range. They're still 3%, but they're below their moving averages, which is making it tough for them. And you can see their master score. They're in 25th percentile for the master score, 7% for the star, 13% for the TAPS local, and their total home appreciation rate in the 42 percentile. Oregon's having a tough time. Pennsylvania looking like a neutral market, having a lot of positive long-term, having a little trouble in the short term, but a neutral market nonetheless. They're above their 10 and 20 moving averages for the 10 quarters, 20 quarters moving averages. They're above that, almost at 4%. Their moving averages are at about 2 and 3%. That gives their percentile rankings: 86 percentile master score, the star score is 94%, TAPS local markets 86%, and the total home appreciation rate is 63. Just in the yellow, but still looking good for Pennsylvania. Puerto Rico, Rhode Island. Long term, they've been showing a little bit of trouble here. A lot of red moving into this. They had some positive signals, but they've changed, so you got to watch where that's going. They're showing up. The TAP score is weak, and you can see from their long-term rates that they've dipped below their 20 quarter and 10 quarter moving averages. They below their averages, so they're showing a weak market right now. Their percentile, 38 percentile on the master score. The star score is at 28. The local at 32, and their total home appreciation rate at 55 percentile. South Carolina. South Carolina looking like a mixed bag, a lot of yellow in there, but moving off the weak and into positive. So you can see this green one moving them off the mid-weak neutral into the neutral zone, which is good. Showing some positive signs here in the past. Just a little bit of shakiness with that red. But you can see they're probably popping back over their 10 and 20 quarter moving averages and solid up here at 4%. So they're looking pretty strong. 71 percentile for the master score, 44 for the star. Now the star, it takes a momentum gauge of what's going on. So they're in the 44th percentile for momentum. Their TAPS local is very strong, and their total home appreciation rate is strong at 76 percentile. South Dakota is showing a little bit of a weak market. They had some positive going on, but it started to turn red. And of course, the current quarters and everything mixed and red makes that TAP score turn to a weak market. You can see that they've dipped down. They're below their 10 and 20 quarter moving average. They're still up at about 3%. Their master score, 34th percentile, 26 on the star, 25 on the TAPS local, and then their total home appreciation rate in 38th percentile. That's for South Dakota. Tennessee. Tennessee is looking a little mixed. We do have some strong long-term indicators, and that puts that in the middle of the weak and neutral zone. And you can see that they're probably started, their momentum is coming back up through their 10 and 20 quarter moving average. So that's what's giving them some positive signs. You can see that here. Their master score is 73 percentile for their master score, for the overall health of the market, 36 on the star. The local markets are doing well at 71 percentile, and the total home appreciation rate, 84%. So some promise for Tennessee. Texas. Don't mess with Texas. Ooh, not looking too good though. A lot of red looking for Texas. They have dropped below their 10 and 20 quarter moving averages for the total price appreciation. They're still around 2.5%, but their moving average is up 4 and 5%. So it's making for a tough market in Texas. 21% on the master score. The star rate is at 1%. Their TAPS local is at 21%, but the total home appreciation rate in the 44th percentile. Just had a friend buy in Texas. Utah. Utah was showing some promise for the long term. These are long-term rates right here, midterm and short-term. So it's moved from neutral to weak. So let's take a look at the momentum of what's going on here. You can see the long-term inflation-adjusted annual price appreciation. The big hit, this was in the financial crisis, 5.67, and then they rebounded nicely, but their moving averages 10 and 20 quarter, they've just dipped below that. So you can see their momentum is moving down below that. So they're approaching 4%, and their moving averages are above that. So that's what's making them move from neutral down to weak. Percentile gauges, the master score is at 78, but their star is at 46. Their TAPS local markets are having a tough time against each other, and their total home appreciation rate is still strong, the 86th percentile. But that just means that things could be moving in a different direction for Utah. As you can see, everything was positive here, looking good, and the momentum has changed to red. Vermont. Vermont looking a little strong. A couple of short-term yellows puts it in a neutral market. If you look at their price adjusted appreciation, they're still above their 10 and 20 quarter moving averages, which is pretty good. They're approaching 4%, and their trend line is moving up. So that's why they're in pretty good shape. 82 percentile on the master score, 96 percentile on the star, and TAPS local score is going to be 88%, and their price total home appreciation rate is at 61%. So they're looking pretty strong in a neutral market right there in Vermont. Virginia's up next. Long term is starting to change here, so they're in the middle of a neutral to weak market, and this is where home prices are headed. So you can see they've got a lot of short-term, mid-term positive stuff, but their long-term stuff is changing here. So the more red you see here is that the outlook is looking weaker. And you'll see here that their trend was up, but they started to waffle, and they're going to be coming back towards 2%. They're at 3% right now for their total inflation adjusted annual home percentage appreciation. Is coming back towards their moving averages. Master score in the 63 percentile, Star Report is in 71, TAPS local 67%, total home appreciation rate at 50%. So Virginia a bit mixed, but their long-term outlook is starting to turn red, so you got to be careful there. Washington State. Washington State having a bit of a tough time, starting to bounce back though, so that's a good sign for them. But it's currently in a weak market. You could see that they were showing pretty strong appreciation, inflation adjusted appreciation, but it started to dip down in the last year, and then they're well below their 10 and 20 quarter moving averages. So it makes it for a tough time. The master score is in their 51 percentile for the master score. Star Report is in the 19%. The local reports are at 42%, 42 percentile, but their total home appreciation rate is at 73. So that's showing some good sign for their home appreciation rate. And that's Washington State. West Virginia. West Virginia is starting to creep up into the showing this red here, but bouncing back, so that it's fighting each other here. That's why they're moving off the weak market and headed towards the neutral zone, but still on that side of the market, where you can see their momentum moving up in this rate from 1985 track until now. They're moving well above, they're moving up and away from their moving averages, their 10 and 20 quarter moving averages. They're moving up and away. So that's where they're getting their positive long-term look, moving off the weak market and into a stronger market. Their master score is still low, and they're in the 28th percentile. Star Report smack in the middle at 59%. Their TAPS local is 53, and their total home appreciation rate is in the 30th percentile. So they could be doing some better there, but they're moving off of the weak market, so that's pretty good for West Virginia. Wisconsin. Wisconsin long-term is starting to switch here. They've had some trouble in the short-term stuff. You can see from this red, which is showing the TAP score of a weak market. And that's, you can see, because their inflation-adjusted home price appreciation has dipped below their moving averages to about 2.5%, where their averages are just above 3. So their momentum is coming down, as you can see. This is the market crash where they're bouncing around negative territory, and they had a good positive momentum coming, but that's all pulling back now. So it makes it for a weak market for them. The master score in the 40th percentile, Stars in 57th percentile, TAPS local 26th percentile, and total home appreciation rate 21st percentile. Makes it tough for Wisconsin. Wyoming. Wyoming is moving off the mid to weak market and into the neutral zone, so just moved up. So things are bouncing back for Wyoming. As you can see, the current quarters are looking good. You can see from the charts here that it's breaking through their 10 and 20 quarter moving averages. You can see that over time. They didn't do as badly in 07 crash. 85 took a much worse hit for them, but you can see that their trend line is in the positive direction, and you can see that it's coming through there very nicely with the inflation adjusted home appreciation. Their master score in the middle there at about 55%. Star Report is 69%. Their locals are doing very well, 75%, and the total home appreciation rate at 90 percentile. So they're appreciating well and strong market there in Wyoming. And that gives us the lookout for the state I'm going to show you the large view of the real estate cycle time lapse. You can see in 1990, through our friends here at Housing Alerts, you can watch the markets go. Most recently, when we hit up to 2007, you're going to see the markets change. In 2002, 3, this is when things were starting to get crazy. 6, 7, purple and red are not good. 08 is not good. 9 is not good. 10, things start to turn around. 11, 12 and 13, California's had a little trouble. 15, 16. You can see all these markets, and if you take a look at Housing Alerts, you're going to be able to dive deep into these. You can get yourself a free state report, take a look at them, and you'll see where it's going with you there. All right. Thanks for joining me today for a quick look at 50 states in 50 minutes. I think I did it in about 55 minutes. So my number's on the screen there, Tim, at 203-987-3404. That's my number. You can text me if you want to get on the show, if you want to report on your local market, if you're a realtor, broker, finance guy, what you see happening in the market, I want to know. This is Home Search TV Live, HSTV Live. You can watch market updates and see your favorite houses and favorite real estate stars on HSTV Live. And we're on Roku, Amazon Fire, all the major social networks, Facebook, YouTube, Twitter, Periscope, LinkedIn. Check out the shows, and if you know of anybody that wants to do market updates or show off their houses, if you want to do virtual tours instead of letting 100 people come through your house in this COVID era that we have going here, please send their videos my way, and I'll be happy to promote them for you. So again, my number's right there, Tim at 203-987-3404. Check out that site, 203-987-3404.com. Friend me on Web Talk, and I will definitely do my best to help you sell your house in whatever market you're in. All right. Thanks again for stopping by. Really appreciate it. We'll see you again soon.